Hello and welcome to the How2Exit podcast, where we introduce you to a world of small to medium business acquisitions and mergers. We interview business owners, industry leaders, authors, mentors, and other influencers with the sole intent to share with you what it looks like to buy or sell a business. Let's get rolling. And now a moment for our sponsors. I want to highly recommend you get Acquisition Aficionado magazine. Every month, Acquisition Aficionado magazine brings you tactics for business buying and selling you won't find anywhere else. Learn firsthand from industry leaders who share their success stories, featuring in-depth interviews and stories from leading figures in the business acquisition industry. This multi-platform mobile magazine speaks to acquisition entrepreneurs wherever they are in the journey. And I want you to visit acquisitionaficionado.com today. Hello and welcome to the How2Exit podcast. I'm Ron Skelton, your host, and today I'm here with Callum Laing, founder and CEO of MBH Corporation, an agglomeration of small, profitable companies from around the world. Thank you for being on the show today, man. I really appreciate having you here.
Pleasure. It's great to be on, Ron.
You know, it's interesting. I've been following your progress and your company for probably the better part of 2 years now. Since I had a mentor that we have a common association with, and heard about your stuff and read. There was a book you did. I read one of your books and stuff. So it's really cool to have you on here. You've created something really unique, and I'm looking forward to talking about that today.
Yeah, cool. Thank you. I appreciate you following us.
I always like to start with the origin story. Kind of, how did you get into this space? What got you started? And kind of leading up to where you're at now.
Yeah, so I've always been an entrepreneur. So just as a kid, hustling and doing little side jobs and things, and my first kind of grown-up business was a recruitment company that I had at the height of the dot-com boom. I was providing IP engineers to telcos in Europe, which was incredibly lucrative and a lot of fun. And that kind of that did very, very well. And at the age of 23 or 24, I think I was at the time, obviously I thought that was all down to my personal talent and good looks, and not the fact that I was in the biggest bubble ever. And needless to say, the bubble burst, and I discovered I wasn't nearly as talented or good looking as I thought I was. But it also kind of broke me. It made me unemployable to anyone else. And so by default, I've been an entrepreneur ever since. I've been all over the place, been in Asia now for 20 years. I think when I was always been interested in sort of macro trends, and one of the trends, obviously technology was a huge trend, but one of the other trends that really stood out to me was the fact that there was the largest transfer of wealth in the history of mankind from west to east, west back to east. It originally started here. And yeah, as a young entrepreneur, it just struck me that it made more sense to be on the receiving end of that equation than on the giving end. So moved over to Asia, based in Singapore now, which great, absolutely great country. But also I spend, as you know, I spend a lot of my life on a plane bouncing around the world, and this is a great sort of kicking off point for that. And then, about 7 years ago, the mentor that you were talking about, a friend of mine, Jeremy Harbour, I'd been chatting to him. He'd come up with a concept of grouping companies together. I'd already I bought one company at that point, and he had this idea of grouping companies together and taking them public. So we started working on that together full time about 7 years ago, and yeah, it's been quite the ride ever since.
Yeah, you guys have done quite a number of acquisitions, right? So the current model, the MBH Corporation, that's an agglomeration of, I was looking at your website, over 25. Is that accurate?
Yeah, I think it's 28 at the moment, but keeps growing.
Yeah. So let's talk a little bit about that. What is an agglomeration? I mean, that's something you guys formulated, or is that a...
Yeah, so I think like all of the elements of what we do have been done before. I think as far as we know, we're the first people that have done it in the particular kind of methodology that we use. And I think the main difference is that we started very much from a bottom-up perspective of what's best for the small business owner. I think if you look at a lot of kind of roll-ups, M&A, they're very often top-down driven. It kind of starts with, often it's ego-driven, and it kind of starts with this idea that the acquirer is the smartest person in the room, and so you end up with a lot of clashes. And as I'm sure you're aware, like most M&A destroys more value than it creates. And we'd seen that happen. It happened to us. We'd had companies that we'd created that had been acquired, and then you kind of get the acquiring company wants to put their mark on it and fix things, and often that destroys some of the value, and you lose a lot of talent. So we basically had this idea that how do we solve a problem for small business owners, and while the rest of the world was obsessed with startups, we had surrounded ourselves, our peers were traditional small business owners that were profitable and cash generating, but they were kind of reaching sort of plateaus that most small business owners eventually reach. And we refer to it as the scale paradox. Like, if you've built a successful small business, you reach a point where in order to get even bigger, you need to win bigger contracts, but you can't win those bigger contracts because the big companies don't like giving big contracts to small businesses. It's procurement best practice. So you kind of get stuck. You sort of bump up against this glass ceiling. At the time when you need to recruit the next top level of management to take you across that sort of ravine, they don't want to work for small businesses because small businesses just don't have the resources to compete on a level playing field with big companies. So that's one challenge that all small businesses tend to go through. The second challenge that all small business owners will be aware of is that if you've built a successful small business, maybe you're doing 10 million, 20 million of revenue or above, or even a little bit below, you're creating a huge amount of value in the world. Like, you're clearly creating value for your clients. That's why they keep coming back. You've got 50, 100, 200 staff that you're clearly creating value for them and their families. But there's a whole ecosystem of suppliers and partners and landlords that are all extracting value because you as the owner get up and go to work every day. But typically there's only one person that doesn't get to extract a commensurate amount of value from the business, and of course that's the business owner themselves. It's very easy to put money into the business, much harder to take it out. And of course, in the good years, hopefully you're drawing a good salary and dividends, but compared to the economic footprint that you've created, it's negligible what you can actually extract. And so really the only way you can monetize that value is to sell the business. But actually a lot of business owners, we might grumble about clients and staff, but actually we love what we've built, and we love building and growing and scaling, and that's what excites us. So we don't actually want to scale the business, but we would like to monetize some of it. And so what you find happening is, and I think kind of, I'm sure other guests have touched on this, with a lot of baby boomers now sort of thinking about retirement. What happens is that sort of the default option for small businesses is to be acquired by a bigger player in the industry. And so you do one of these deals, and it's the biggest deal of your life, and you're very excited. But invariably, these deals are structured as a 3-year or a 5-year earnout for the owner, and that's fine. The acquiring company knows that you're the talent and it's your child, and they want you to shepherd it. The problem is that us business owners, we don't make very good employees. We're not very good at being told what to do. especially when it comes to our own baby. And of course, the acquiring business needs you to conform to their own systems and processes. So they very quickly tell you that you need to go and renegotiate all of your client contracts to put them on our standard terms. And it's great that your staff think of you as family, but we need to renegotiate all of their contracts so that it's not upsetting the rest of our existing employees. And suddenly you're now trying to hit these targets that you committed to with one arm tied behind your back and fighting them off. And it just doesn't work for most business owners. Most business owners last 6 to 12 months tops before either quitting in disgust or getting fired from their own business, which is a pretty disappointing way to end a 20-year career of creating value for everyone else. And often because of that, you end up leaving a huge amount of the value on the table because you failed to deliver and hit these targets. So this had happened to us. This was happening to all of our peers on a regular basis. And so our idea very simply was, let's create a publicly listed holding company exclusively for the use of good, well-run, profitable small businesses. And in effect, what happens is the business owner swaps their private equity for public equity, but they retain full control over the business. So it's their brand, it's their hiring and firing, it's their culture. They don't need to run decisions past anyone. They just carry on running the business. But now when they go and pitch for business, they're a global multinational PLC. So they can leverage the balance sheet to win much bigger contracts. When it comes to recruiting and retaining good senior teams, they've got actual public stock options that they can use. If they want to grow through acquisition, they have the mechanism to do that. They have the currency to do that. So that's really the concept. And then you basically end up with a holding company full of very motivated, very driven business owners that are also the majority shareholders of the public company. So they're always in control of their own holding company. And it just creates a very nice dynamic. And so MBH is one of the groups that we've created to do that. And as you mentioned, we're up to about 28 companies now in the last 3 years. So we started with an empty holding company. We're now 28 companies doing 100, probably US terms, about 150 million of revenue. It's 9 or 10 million US of EBIT, paid dividends every year. And I think, that's been achieved even with kind of 2 years of COVID. So probably the hardest 2 years to be running a group of small businesses. But it's probably put us about 2 years behind schedule, but still doing okay.
I see that it's very diverse, right? A lot of holding companies are holding, in a central area. They may be, manufacturing or construction materials, but when they say they're holding and they're broad, it's like, okay, they do construction materials, they make concrete item, and they might actually own the rebar company and the sand delivery, but it's still servicing one big anchor corp. I love that there's some protection for the investors out there, the guys buying your stock, because it's diversified, like really diversified. I look in on here that everything from education, engineering. At one point, you had a taxi company, right?
Yeah. So we still have so the taxi company is an interesting one. It was a like many people, I thought taxis were dead and buried by Uber. Quite the opposite. So we got approached by a taxi company. They had been trying to acquire other taxi companies to build a nationwide network of taxi companies in the UK. Hadn't managed to do so because of kind of egos and all the usual challenges. Discovered our model, joined us, and within 18 months they'd already acquired 3 companies underneath them, which has already propelled them from, when they joined us, they were the 357th by fleet size in the UK. Today they're in the top 10 by fleet size. So dramatic growth in 18 months, and they've still got a shop in list of another 60 plus taxi companies to bring in. And what they'd realized was that it no longer matters what's in the back of the taxi, whether it's a person, a pizza, or a parcel. It's just last mile logistics. And if you own a nationwide network, you become incredibly valuable. So, yeah, they joined us specifically to leverage our model to grow. But you're right, we very deliberately, we had done one of these groups, and we'll still do groups that are industry specific. The advantages are that it's much easier to target investors that understand that space, if you're industry specific. My concern around industry specific is if you go into an industry and it's a cyclical industry, as many are, if you get in at the top of the cycle, it doesn't matter how good you are, it's going to be a painful journey. And so we decided to be diversified from day one, both geographically and industry. Now, of course, we hadn't expected a global pandemic to affect all industries, but yeah, even then, when that hit us, we had 12 companies in the group, and 75% of our revenue and profit came from the construction industry, which got very heavily hit by COVID because lockdowns. Today, a couple of years later, I think that the last I saw, 6 of the top contributing companies in the group are across 5 different industries. So, really powerful demonstration of how important diversity is and or diversification is. And in fact, one of the last companies that we bought just before the COVID lockdown was a caravan company in the UK. So it's a 60-year-old caravan company, so motorhomes in the US.
Mm-hmm.
They're kind of less glamorous than motorhomes, if that's possible. They're kind of these things that you tow around on the back of a car. And I got a stick from my friends when we bought this because it's about the most boring company that you could imagine. It's kind of what retired couples do. They buy a caravan and you always get stuck behind them on small roads. It's a pain. So I got quite a lot of stick. And then of course there's lockdowns and travel bans all over, and this company, Robinson's Caravans, has just had 2 years of absolute bumper outperformance. Cannot keep up with demand. So yeah, it's really it's funny. Of course, like at some point I'll claim that was all my genius strategy, but that's pure luck.
I live in a fancy caravan, so I actually live in a tiny home, right, which is nothing more than a custom-built caravan. I have a walk-in, stone shower with river stone and tile, and a full working, full-size bathroom, bigger than the one I had in my other house. But
Yeah,
it is still yet on trailer, and I can move it. We just drug it 1,800 miles and parked it in the redwood forest because my wife needed to be close to her family, right? So and we full time live in it. So I get it. I like the model, and during COVID, a lot of them took off, like because there was no other way to travel, and people still wanted to go on vacation. And if you were locked down and supposed to be inside of your house, I'll just drag my house with me, and I'll be locked down on this campsite, and with a beautiful view. So
yeah, I was quite jealous. I was looking at the numbers because supply became a huge issue in the UK and in the US.
mhm.
And Singapore, for all its advantages, is a very small island. So I was quite jealous. Like there are no caravans in Singapore because it's basically 45 minutes from one edge of the island to the other edge of the island. So there's not much exploring to be done. So I was quite jealous of those that could get out on the open road.
So I lived in Hawaii for 3 years, and it's about that size. I think it's 20. Somebody's gonna correct me on the show. It's about 27 miles across or something at the longest on Oahu. So, a lot of people get what they call rock fever, even when they're not locked down. Meaning, you're stationed there. I was in the military. You're stationed there for 2 or 3 years, and by the end of year 2, you're just ready to get off the island. I never had that problem because I like to dive and go in the water at night. So I would go, and this is Hawaii, the water's always warm. So at night, I'd night dive. During the day, I was a full-time college student, so I never had the opportunity to get bored, right? A full-time military, full-time college student, and had some recreational stuff to do on the water. So never took up surfing. I tried once or twice, got hurt both times, and decided it just wasn't for me. And I was an adrenaline junkie at that age, right? I raced motorcycles and everything else, but the last time I ever went surfing, the thing I heard is "No, Holly boy, no," which means that you're not supposed to be on top of the wave. You're supposed to be in front of it, because when the wave breaks, it drops you like a rock on the beach and it hurts. But no, I woke up to a big Samoan boy about to give me mouth to mouth and decided I wasn't surfing anymore. So knocked me out. But hey, let's go into kind of. I love the diversification. I mean, you got everything from, uh, correct me wrong. I mean, from these caravan and the taxi to you acquired or at least you guys were talking about it, a sausage company here in the United States, right? Sausage manufacturer.
Yeah, so we've got Boulder Sausage in Colorado, the official sausage provider of the Denver Broncos. Proud to announce. Um, so yeah, that's a great little business. Original German recipe. Been making sausages in Colorado for 42 years, I think. Jim is the principal there. Great business. And yeah, so we brought them, I guess, couple of years ago,
Hmm.
and they've got there's a bunch of other F&B businesses around there that we're looking at as well. So yeah, I think that was our second or third US company.
Cool. So let's talk about the diversification of location, right? You have US, you got the UK. Where all are you guys located?
So basically, we've tended to focus on English language, English rule of law. So New Zealand, Australia, Singapore, UK, US, Canada. Um, the, I think right now about 70% of the companies are UK based. That's not by design. It's just how it's kind of panned out. So we tend to have any given time we'll probably have 40 or 50 companies going through due diligence, and it's just deals can complete very quickly or they can take years. It's just kind of which ones fall out of the pipeline. Um, if if they fit within an existing industry vertical, we put them into that industry vertical. If they don't, then we'll create a new industry vertical for them. When we launched, the first two verticals we had were construction and education. And so investors, I always used to get the question about, where's the synergies between construction and education? And I kind of got bored of trying to explain that we don't rely on synergies. These are profitable, cash generating businesses. We don't need synergies for the model to be successful. And I kind of got bored of that answer. So I started telling people that it was child labor. It was what we used. But yeah, I realized that joke's funnier in some countries than other countries. So I had to stop
Yeah.
using.
Well,
Um,
I've got a dark sense of humor, so I laughed, and probably, somebody out there is going to go, "You're going to hell for laughing over that." So,
yeah. But what's interesting though, I mean, a lot of M&A does have this obsession with synergies, and one of the things that we had realized was synergies look fantastic on paper. They look fantastic in textbooks. Um, the problem is when you've got humans, you kind of end up with all sorts of challenges. And you'll find two companies in the same industry, but if they don't get on, they don't want to. If they've got different clients, they don't want to work together. And actually, if I look at the most interesting JVs and partnerships within the group, they're all cross-industry. Some really kind of interesting, unique ones. Interesting, like the construction and the education sector have worked together. They've created an apprenticeship program for disadvantaged youth to get them into the construction industry, which is really struggling with in finding employees. The taxi company and the construction company both realized that they had challenges with they needed more effective ways to get cash to their employees, because towards the end of the month they'd be running out of cash. So they designed an app that allowed them to draw down their cash, and so they're working together on that. And these are things that, like, nobody sitting with an MBA would ever think of. Like, we certainly didn't think of it. But when you put smart entrepreneurs in a room together, all with a vested interest in the group profitability, you just get all sorts of very cool ideas and opportunities popping up.
I think that this is just a personal opinion from the last couple of years of evaluating stuff and really studying the M&A space. I think trying to accomplish synergies is kind of the magic carpet, right? A lot of people think it's cool, but I honestly think it destroys more businesses than it helps.
I think, look, I think it works in theory, and clearly it can work in practice. And I think, the private equity approach to doing it, first of all, they're doing it with much bigger companies. They can often ride the three pain that it takes to disrupt and lose a lot of the talent. So they acknowledge that dip's going to happen before it kind of comes out the other side. So I'm not saying it can't work, but generally, I think, especially with small businesses, and this is, a lot of people try and do these roll up and lists, and they'll buy 7 dentists and try and merge them all together. And these are 7 business owners that have been running their own business in a particular way for 10, 20 years. They're not going to change. There's going to be so much resistance. And when you've got a relatively small business, creating that kind of wholesale change is very, very difficult to do. So, we just, we kind of acknowledge that that's too hard, and because we're buying good, profitable, cash generating businesses, basically we want them to keep doing what they do. And I think one of the common misconceptions from especially the investor community is that small businesses are badly run. There's kind of this idea that if you haven't become a big business, you're doing something wrong. And actually, small businesses are, there's always opportunities. There's always, like, when you look at a business, you can always see what they could be doing differently. But actually, small businesses tend to be pretty effective, pretty lean. They don't tend to waste money because it's the owner's money. Whereas you contrast that with a big corporate that's got, they can lay off 300 middle managers to appease the shareholders, and it doesn't make a difference to the day-to-day running of the business. So, small businesses, they may have 1 or 2 employees that aren't fully pulling their weight, but equally those employees may be the ones that keep the culture of the company, and therefore private equity would get rid of them, but they would destroy half the culture of the company. And the business owner knows that, all right, they might not be the most effective employee in the world, but it's worth keeping them because the other employees like having them around. So there's a lot of kind of, I think small business is much more about psychology, whereas big business, you can play more with the balance sheet.
Yeah, and I think I'll acknowledge that what I said was a little bit erroneous in the fact that I don't believe that synergies will destroy a company. I believe that trying to create synergies in a small roll up, 7 to 10 companies, is a 3 to 5 year play. I think it's not an overnight type of thing. And I really like what you guys have got going on. Let's talk a little bit about, like, kind of the process, because I can imagine, I don't know if you're aware, we created something similar, started a marketing roll up, but in the agglomeration model where we left them in control. It was working really well. And I won't get too far into the story of why it stopped. But one of the things that was challenging is to get a common model of evaluation, because every person that came in thought their business was worth way more than it was what it should have been, which okay, but we had to get a standard model. So because the way we lined ours up is we were taking a minority stake in the companies, as I think you guys kind of do, in return for you know a minority equity stake in return for becoming part of this larger corporation. So tell me about how you do the valuation and what your mindset around the valuation is.
Yeah, so we actually take 100% of every company. So every company is 100% wholly owned. Um, when we first started this, what we were trying to do, so basically the game is an arbitrage between what a big public listed company can trade for versus what a small private company can trade for. Um, when we first got into it, we tried to give the business owners as close to that number as possible because this was designed to help business owners. Um, the problem that we found with that was that we were too close, sometimes even above an exit valuation, and this wasn't supposed to be an exit. It's not an exit. It's basically a method for a small business owner to grow through leveraging the power of a group, but also to be able to take some liquidity off the table while keeping control. And so as long as we were giving them really good valuations, we attracted people that wanted to exit. And so that was the wrong model. So what we then shifted to was a fixed perpetual earning model, which is based on what your last year's EBIT contribution is. So, and it's EBIT, not EBITDA. Anyone that plays with numbers will know that DAR is where you can hide whatever you want to hide. So we stick to EBIT. We're interested in cash flow. And every company is on the same model. So it's basically speaking, it's 3 times earnings plus whatever's on your balance sheet. So if you've got money in the bank, that comes in. So if you've got, say you're doing $1 million of EBIT and you've got $500,000 in the bank, you might get 3.5 million of stock on day one, and then every year thereafter, any incremental EBIT profit gets multiplied by 3 times. So if you came in at 1 million, if you did 1.5 million in your first year, that 0.5 million, we times that by 3, and you get another 1.5 million in stock. And each lump of stock that you get is locked up for 12 months. So when you get your bonus shares, they're locked up for 12 months, but your last lot of shares have just come unlocked. So you can sell down some, take some cash off the table, but still keep control of the business. And that's a very, that's what really kind of one of the foundations of the model is that you've got that equitable model. Everybody in the group knows that everybody else came in on the same model. And that's important for the culture of the group, but it also saves us a huge amount of time because we do away with all of the negotiation stuff. So you've got two things that typically slow things down. One, as you point out, is that every business owner thinks their company is worth more than the buyer wants to pay for it. So first of all, we have to kind of switch the mindset to you're not selling the company, you're taking it public. So automatically that takes us away. We don't use the word valuation for a start. The second thing that happens is that no lawyer is going to want to do an easy deal. They're going to want to try and complicate things. They're going to try and want to do the best for their client. So they're going to kind of try and push back and introduce clauses and all of these things. Well, because every other company in the group has signed up to the same terms and the same model, basically we can say to the lawyer, well, you can mess around all you like, but you would have to convince 28 other businesses that your business is significantly better than theirs, which is a hard thing to do. So it enables us to move much quicker because it's just a standardized cookie cutter approach.
I like that. Now, You said it's publicly traded. What stock exchange are you guys traded on?
So we're traded on we're a UK PLC. We listed on the Frankfurt Stock Exchange because it's one of the most liquid, Frankfurt in Germany, one of the most liquid stock exchanges. It's also quite flexible to our model. So a lot of we wanted to be on the main market. Frankfurt is a main market. It's one of the top ones in the world. A lot of main markets have restrictions around decentralized control. So they want to see centralized control, and we're the ultimate in decentralized control. And a lot of main markets also have controls around how much new stock you can issue. So, for example, on the London Stock Exchange, where we would have listed, if you create more than 20% of your market cap in new issued stock, you have to delist, reissue a prospectus, and then uplist again, which obviously our model wouldn't work. And then we did a cross-listing to the OTCQX, mainly so that American business owners could see our ticker in their app. That hasn't really worked so well. There seems to be a lot of the brokers don't seem to cover the smaller stocks on the OTCQX, and we're kind of we're sort of exploring other markets as well. So yeah, it's an interesting space.
We evaluated that because the roll up we were doing was international, and one of the exit strategies was you did it, you took it public, then kind of a SPAC, right? You kind of took it public, then bought into it. But we were looking at that as one of the exit strategies, like either buying and acquiring something that is public, and then consuming all these into it, or the other way around, taking something public. The difference between the Frankfurt exchange and the US process was to the tunes of hundreds of thousands of dollars, as far as the legal process to take a company through that and the regulatory nightmare to do so. Um, you know, I, I can see why you wouldn't go straight to try this on NASDAQ or something, right?
I mean, interestingly, we did one listing with Nasdaq in Europe a few years ago. We've got a very good relationship with Nasdaq. I was with one of their IR guys at a barbecue the other day. They were pushing quite hard when we started talking about doing a cross listing to the US. They were pushing quite hard because it's an international company. It's fast growth. We bring in investors from all around the world because the business owners from all around the world. So they really like the model. The challenge for us is on Frankfurt, we have to submit 2 sets of numbers a year. So audited numbers and the management accounts 6 months later. Frankfurt is quarterly. And even twice a year, it's a fairly significant burden for a small company. So to have 28 companies trying to submit numbers every quarter, they just wouldn't be doing their core business. So yeah, we decided that for now it didn't make much sense.
I like that. So you said earlier that you guys typically can have as many as 50 businesses in some form of evaluation, due diligence and stuff. What's the main criteria, the selection criteria? What are you looking for?
So for us, it's really about finding good, well-run businesses that we're not going to have to worry about. We're not staffed up with a team of MBAs to go in and fix problems. It's an incredibly lean model. MBH only has 2 full-time employees, which is myself and Victor Tan, our CFO. Everything else we outsource. So we're not in a position to fix companies. We're not interested in distressed companies or anything like that. So we're really looking for good, well-run, profitable companies, and preferably where they're still owner operated. And I'll give you kind of an example of why that makes a difference. And I didn't even know that this had happened until after it happened. But during COVID, when times were really tough, some of the business owners were shoveling their own money into their companies to cover salaries and all the stuff that you do as a private business owner anyway. But they're now part of a PLC. If you take a purely cynical financial look at it, they're employees. Why on earth are they taking their own money to tide over cash flow problems in the business? It doesn't make any sense to the finance community. But that's why we love business owners, because this is something that they've poured their life and soul into for 20 years. It means more. This is not just a financial transaction for them. This is their legacy. Part of why they've joined us is because they don't want to have somebody else come in and destroy the brand and fire half their family and stuff. So where possible, we like it where the business owner is still has some level of involvement and care in business.
There's no way as a business owner that you cannot tie part of your identity to it. I think we do it a little bit too much, actually, but as part of owning a business, you go in there day in and day out. You work with the same people. You've hired them, but you've been around these same people for a year, 5 years, 20 years, sometimes lives. If you're a second or third generation, company, I've seen companies where this guy's worked here, his dad worked here, and his granddad helped start the company, kind of thing. You know, there's a sense of loyalty to those employees that is
Yeah, and I
really.
think this is the bit that a lot of people don't understand, and it's why I said small business is all about psychology. So, somebody will look at us from the outside through the lens of a balance sheet. So, a typical investor or private equity, and they'll see 28 companies and 25 CFOs, and they'll say, well, yeah, that makes no sense. Like, fire 20 of the CFOs, consolidate the finance function, and you've just made an extra 3 million in profit. The problem is, like you say, that those CFOs they're often the most trusted person in the business. They've often, half the companies I see, it's like the brother-in-law or something is the CFO. Firing that CFO to make a 5% incremental gain, it's just not worth it for the headaches and the pain it causes. I think a lot of people miss the intangible benefits. And for us, every time we add a company, we're adding typically 20 or 30 years of entrepreneurial experience from that founder. We're adding their network. Those employees now have a larger base to connect with and chat to, as do all the other employees. So we have kind of forums where the marketing guys get together and the finance guys get together and the ops and the ESG guys get together. There's a lot of again, comes back to the psychology and the personalities that's very key.
So there's something I keep wanting to think. I keep thinking about, I want to talk about, because I don't want to miss this, because there's a huge potential there. Do you guys do the 28 companies, the CEOs and the leaders of those companies? Do you guys meet regularly in some form of mastermind? And how do you guys help move each other forward? Because cool. The reason I'm
Yes.
asking is that's a huge potential. Like that many, and the fact that they're in different industries. Like one of the best things I've ever seen is I used to go to entrepreneur meetings every single week, and everybody's like, well, "You're in real estate. Why would you go to this thing with a startup?" We're like, "What startups pitch?" I said, "Because those guys are facing challenges and doing things on a daily basis. That if I think clearly enough, I can probably apply some of the stuff they're doing to what I'm working on." Right?
Yeah. So I mean, we do everything on Slack. So there's people bouncing ideas around on Slack all the time. We have monthly Zoom meetings. We have to split them into two now because of time zones. And then once a year, we get together just the principals. So next month, 2 months' time, we're meeting in Phuket,
Mm-hmm.
just the principals. And then 6 months after that, we'll meet in London. So that's principals and sort of senior team members, so that they can kind of interact as well. It's very valuable, kind of having that connection.
I do a lot of masterminds. I host one for M&A guys out there. Every 2 weeks we get together and just kind of help each other move the game forward. But I honestly think that what you've got built in there is extremely powerful, because you have a whole network. It's like, hey, I've got this business friend of mine trying to get into Europe. He's got this product. Who you know? I mean, you just have a network of people who have a common interest to see each other succeed. That's extremely powerful.
Yeah, so one of the kind of a lot of my thinking around MBH is not of it as a company, but more of it as an ecosystem that attracts small businesses, and some of them will go bust over time. Some of them, entire industries, if we're successful and we're multi-generational as I want us to be, entire industries will disappear. But I kind of look at if you look at something like YPO, Young Presidents Organization, or EO organization, there are these incredible, powerful networks. They have the mastermind groups, um, and they have grown very successfully. And if you take that model, if you think of us more of a network, that business owners say, okay, I want to belong to this network. Well, imagine those mastermind groups where everyone in the group owns a slice of the future of everyone else. They actually have that stake in your future. I've noticed it changes the dynamic. One of the things that used to frustrate me as an entrepreneur was the amount of people that would give you uh, good advice, but it was, they had no skin in the game. So, they would tell you, it kind of goes through different phases. Like a while ago, everyone had to have an app. It didn't matter what you were doing. Oh, you got to get an app, or go into China. If you just get $1 off everyone in China, it'd be easy. And so everyone's got these kind of theories, but they've got no skin in the game. And that doesn't happen in our group. If somebody asks for advice, they get very measured, very well thought out advice, because nobody wants them to go and waste money on a frivolous project. So it's a very powerful.
I can see that. That's incredibly powerful. Even in the masterminds I run, a lot of times somebody will throw an advice out and I'll make. I have this thing where I like, have you done that, or did you read it in a book or seen it on a YouTube? Right? I want to know the difference, and it's okay to share an idea that you've pulled from a book, or you've seen something on YouTube, or you know a guy that did it. But when you're telling somebody they should try this, they need to know whether or not you've been there or not, because they need to know whether or not they're going to call you when it doesn't work. And this is what's going on, and what did you do when this happened? Or they need to go find the guy that made the video, or wrote the book that you read, that you got the idea from. So I get, I just think there's a huge, I think it's more powerful than the possible synergies you could have, is a possible, like,
Yeah,
having
that's a
28 business entrepreneurs on a common vision. So
yeah.
let's talk about that. What is when I say long term, I think 5 years or whatever, but when you say long term vision, what is your time span on a long term vision?
Yeah, so I put out an article last year talking about MBH 2121, so kind of 100 years from now.
Mhm.
And I that's really, we've got companies in the group that are second generation companies, 40, 50, 60 years old. My view is that we owe it to them to have a platform that if they survive for the next 50, 60 years, we're still going to be there. So I did a lot of research into companies that survive hundreds of years, or the very few that survived over 1,000 years. Like what was the commonality? What mistakes do they make? And what I realized was that actually there's very little commonality amongst companies that survived over 1,000 years, except they all have one thing in common, which is they haven't messed up. They haven't done something stupid that has killed them. And the one that sort of sticks out the most is debt. A lot of companies take on too much debt, and that kills them. So um, putting together, like, a lot of where I spend my time thinking about for MBH is the governance structure. I'm not always going to be on the board. It's that the model is designed to have a constantly rotating board and constantly rotating CEO. It shouldn't be determined by um, any one driven leader. The model has to be sustainable. But that depends very much on having very strong governance and yeah, culture around that. So that's a lot of what I focus on. And I got, basically the idea is that we build a community of small businesses hopefully multi-generational, that can support each other. And the more companies you bring into it, the stronger the proposition becomes, the more value that you add. But you've also got a lot of headstrong, opinionated business owners in there. So making sure that there is that equitable model that's based on meritocracy and is a fair model and is sustainable is a huge part of the thinking.
Maybe this is maybe I should have done my research a little bit better, but I probably should know the answer to this just by reading through your website and stuff. But have you guys acquired like what I would consider like corp components, like a marketing company, an accounting company? Like, could you build an ecosystem to support this, or you outsource a lot of that?
No, so basically, we don't go out targeting businesses. We get over 1,000 applications a year from companies that target us, and if there's M&A guys out there that want to work with us, please reach out. Our view is much more about finding good companies. Over time, we will attract great marketing companies and great accounting companies, and they'll join us, and that's good. And the companies in the group may or may not choose to use them. It's entirely at their discretion. It's kind of not something that we're sort of particularly focused on, but it'll come.
So one of the challenges we had was that internal accounting process. So when you do have synergies across and people want to work together, is it just straight billing? Is there a discount? Is there, like this cross-selling, upselling, commissions going on? Did you guys tackle that? Or you just let them figure it out?
Just let them figure it out. I mean, it doesn't, trading within the group doesn't really help us because it's just an internal transaction. Companies cross-selling for each other is great, and leveraging off each other is great. But we don't. It's pretty much up to them to figure it out as and what makes sense for them. There's no pressure on them to work with each other if they don't want to.
So for a while there, you guys were having like people like myself, acquisition entrepreneurs. If we seen something that would be a better fit for your model than it would be for something we want to do, we could make an introduction. Are you still taking those introductions?
Yeah, absolutely. We've got an introducer program that is very generous.
Yeah. So we're getting close to the top of the hour. Let's make sure everybody knows how to reach out to you. What's the best way for somebody that either wants to work with you, want to take a deeper look at what you got, maybe invest in it, or maybe bring you deals? How would you want people to reach out to you?
Yeah, absolutely. So go and have a look at mbhcorporation.com. It's incredibly comprehensive. There's a business owner section there, and the team's very responsive. If you leave a message, you'll get a response within 24 hours. Reach out to me on LinkedIn. My team will kind of, especially if you connect to me, mention this podcast, and my team will let that through. Look, if you've got good companies, we would love to talk to you, or
Awesome.
investors. We're always open to that as well.
I always like to ask if somebody watched the show and they can only remember one thing from the show, what would you want them to remember?
I think just when it comes to small business M&A, it's more about being creative. And I think if you can start with what the business owner wants rather than what you want, it'll go a long way to making it a smoother process.
You guys certainly have put a lot of thought into that. Like, what does the business owner want? What do they need? And what will make a difference in the world of small business owners and the longevity of their companies. So that's really cool. I appreciate your time here. I want to make sure everybody knows that they can reach out to you. And again, thank you guys for listening to the show today. As always, I always tell everybody we do hold a mergers and acquisitions meetup twice a month. I do one in the morning and one in the evening, my time, so that people like Callum here can join if he wants, because if I did it at the same time, it wouldn't work for everybody. So I have people from Singapore. I've got people from Australia, a lot of people from the US. Everybody joins that. So that'll be in the show notes. Callum's contact information, including his LinkedIn, everything will be in the show notes. So if you're trying to reach out to him, you'll be able to get to it by looking at the show notes here. I appreciate your time, and thank you for being on the show, man.
Thanks, Rob.
Cool. And that's the show. Hang out for just a second. Hey, it's your host, Ronald Skelton. I want to thank you personally for watching the show today and invite you to call our new hotline, 918-641-4150. That's 918-641-4150. Call us and tell us about our show, ask questions, suggest a guest, or even tell me about a business you have for sale, and we'll reach back out to you. Again, that number is 918-641-4150. Call our hotline, leave us some information. Thank you. I want to announce our new channel partners, the ITX Marketplace. Since 1998, ITX has created $5 billion in value by selling more than 225 IT businesses in 20 countries. ITX works exclusively with IT-enabled businesses generating between $5 million and $30 million who are ready to be sold, and M&A decision makers who are ready to buy. For over 25 years, ITX has developed industry knowledge that helps determine whether a seller is a good fit for their buyers before making the match. ITX Mergers and Acquisition Marketplace we have partnered with has a proprietary database of 50,000 plus global buyers seeking IT service firms, managed service providers, Microsoft service providers, software as a service platforms, and channel partners with Microsoft, Oracle, ServiceNow, and the Salesforce space. If you have an IT-enabled business you're ready to sell, I want you to visit the itexchangenet.com/marketplace, how to exit. That link will be in the show notes. Visit them now. The Investors and Entrepreneurs Professional Mastermind. The Investors and Entrepreneurs Professional Mastermind combines the traditional peer-to-peer mastermind introduced first in Napoleon Hill's famous book, Think and Grow Rich, with accountability partnering, where your peers help you ensure that you set goals, take actions, and get results. If you want to scale, blow past roadblocks, and achieve success faster than you might think is possible, I suggest you take a visit over to TIEPM.com. That's TIEPM.com and check out the Investors and Entrepreneurs Professional Mastermind.